Instagram, Facebook, Mark Morris, toldtobethebroke.com, toldtobethebroke.com. I wanted to show you how to read your credit card statement because this is, look at this. Consumer debt hits $17 trillion as of yesterday. Consumer debt hits $17 trillion. Do you know what Grant Cardone said? 47% of people don't even have $400 in their savings to cover an emergency. 57% of the people don't even have $1,000 saved, period. So it means if a person gets hit with an emergency, they got to use their credit card. Thus, you get what 17 trillion. If you can look over it, like $17 trillion. What makes it so sad? People can't even calculate how much interest they're paying on their loan. They just get the payment and pay it. I don't want that to be you, man. Because if you're smart, you can use the $17 trillion to your advantage and put extra money in your account. Like I told you yesterday, this is for American Express. 20.49% to 27.49% annual percentage rate. Annual percentage rate is when you borrow money, that's the amount they're going to charge you per year on that money. So if you borrow $10,000 in credit card debt, either you're going to pay $2,049 or you're going to pay $2,749 in interest. Now, what if you could take that interest to zero, like I showed you with the balance transfer? What does that mean? That means you have $3,000, $4,000, $500 extra in your pocket that you don't have to pay toward the credit card, because now every dollar, if you get it to 0% or a lower interest rate, every dollar you spend reduces the loan. Right now, before that balance goes down, say for this if I take $2,000 out for a credit card for American Express, that's $2,049. Here it is. So it's $2,049 I got to pay in interest before I reduce the balance of my loan. That's why your loans go down so low, because that payment they give you, most of it is interest, and a small amount is interest. When you do the credit card transfer strategy, but you basically you keep that loan, but now the interest goes down to zero. Now the interest that you were using to pay to get that balance to come down some, now goes to zero, which means now you have extra money to pay off that credit card faster. That's part of the pre-sale program I have for showing you the power of interest. It's a little bit tricky, but just look at your payment statement, because credit cards, interest, the annual percentage rate, and then you have your loan balance, and then you have your payment. So if you learn how to calculate, once you see your loan balance multiplied by your annual percentage rate, that's how much interest you're going to pay. So a lot of people don't know how to do that, man. So a lot of people are just getting ripped off. They just pay. And they probably don't even need to be paying, man. Learn how to use the power of interest. Just think, you're going from paying 20.49% to 0%. That means all that interest that you would have used to pay toward your credit card is all free money that stays in your pocket. Because every penny you apply toward that loan balance, when it's 0%, reduces the balance. So think about that. Subscribe. Let me know what you want. We'll go into more detail with some of our programs. So I recommend you get the pre-sale program for $150, or you just get the $50 calculations where I just show you here's the loan balance. This is the annual percentage rate. Then you can try to figure out how much of the loan, that payment you make each month, lowers your loan. Some people don't even know that. Until then, people are just going to keep getting ripped off. I don't want that to be you.